Hi everyone, welcome to Clone Compounding, where our mission is to learn from others in order to achieve financial independence. We know that stock markets around the world are on a downward trend, with stocks from many companies down by 60 to 70% over the last 12 months. But the China tech stocks have been hammered over the last 2 years due to several headwinds: COVID, US-China geopolitical tensions, US ADR delisting concerns, Chinese economy, and most importantly, lot of regulatory pressure by the Chinese government on internet platform companies. In today's video, we will talk about one such company, Baidu, a leading internet service and AI company from Chinese mainland. For a long time, it was referred as Google of China, but over the last 5 to 10 years, Google has left Baidu much behind in search and advertising. Once a darling of Chinese stocks, Baidu has been trading for less than half its stock price for many months now. In this video, let's have a look at the rise and fall of Baidu. Before we start, please smash that like button so others can find this video as well. Let's start with what is Baidu and who started it. With its headquarters in Beijing, China, Baidu is a Chinese multinational technology company. It's one of the biggest internet and AI firms in the world. Its mission is to make the complicated world simpler through technology. Founded in 2000 by Eric Xu and Robin Li as a search engine platform, it was an early adopter of artificial intelligence in 2010 to make content discovery on the internet easier. It's one of the very few companies in the world that offers a full AI stack encompassing an infrastructure consisting of AI chips, deep learning framework, core AI capabilities such as natural language processing, knowledge graph, speech recognition, computer vision and augmented reality, as well as an open AI platform to facilitate wide application and use. Baidu is composed of two segments. Number one, Baidu Core, which accounted for over 70% of its revenue in the past 3 years, and number two, iQIYI, which made up the remaining 30%. Its flagship product, Baidu App, which is the number one search plus feed app in China, reached 544 million MAUs in December 2020. The rise of Baidu. Over the years, Baidu has seen explosive growth. With more than 75% market share in China, it is the second largest search engine in the world. Baidu became the first Chinese firm listed on the Nasdaq 100 index in December 2007, and its market value reached nearly $100 billion in 2018. Some reasons for its rise include Baidu's revenue, the main source of which is in advertising, has grown over 50% since 2015. However, the advertising well has started to dry up due to a slowing Chinese economy. Not to be outdone, Baidu has branched into AI chip making and released its high-performance chips. The chip-making unit has strong tailwinds, especially since the Chinese government is trying to boost the country's independence around the crucial technology. Baidu is also branched into the EV and autonomous vehicle sector. The company has proven success in this arena with its robo-taxi service, which has received approval to run fully driverless taxis in China. It's also providing AI via its Apollo platform to automakers like Ford, Volkswagen, and Toyota, and its top-notch AI chips. The sector, currently in its infancy, is expected to be worth $60 billion by 2030. These strategic investments in red-hot industries are what keeps analysts raising stock price targets on Baidu. The fall of Baidu. Despite the fast growth in early years, Baidu has been through several challenges recently. The hyper-competitive economy of China has had its toll on Baidu as well. Some reasons for its fall include competition. Google abandoned the Chinese market in 2010. Despite this, Baidu still has to contend with tough competition in its core search and advertising segment. The most powerful ones are Tencent, Alibaba, and now ByteDance. Tencent's WeChat offers users all kinds of search services within its ecosystem. Baidu is a Chinese company, and as such faces continued scrutiny from both investors and the US government. There is a high risk of Baidu and other Chinese stocks being delisted from US exchanges. The verdict: given Baidu's continued focus on AI, it will continue to be a powerful player in the Chinese market. It has already won licenses to commercialize robo-taxis. Also, its AI cloud services are doing well. Overall, its long-term growth prospects are very strong. So that's it from us. Let us know your comments below. Make sure to smash the like button, it really helps others in finding this video, and subscribe. Thanks for watching, and we'll see you in the next one.